Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. As promised, we'll get chatting with the management of NIIT Limited. Posted a weak set of quarter two numbers on a YOY basis. The stock is down 2.5% as we speak. Mr. Vijay Thadani, the Vice Chairman and Managing Director of the company, is joining us now. Mr. Thadani, good afternoon. Thanks a lot for joining us. Well, I was looking at your businesses. You have two segments. One is CLG and the other one is S&C. In the CLG business, you had earlier guided for a growth of 3% on a sequential basis on constant currency terms. It has declined by 5% on a sequential basis. What led to this and what is the outlook going forward?
Yeah. So, first of all, thank you very much. And thank you for all the nice words. CLG business, we did guide at the beginning of the year for a single-digit growth on a quarter-on-quarter basis between Q1 and Q2. And on 30th September, based on the track record that we had, or the results that we had of the previous, of the last 3 months, we did issue a pre-announcement guidance and update where we said that we are likely to see a negative growth this quarter because of a sharp decline in consumption with one large client. And that is what it has worked out to be, and that is what we are reporting right now. So it is consistent with the update that we had given. We had also said that this speed bump is likely to be recovered from in the coming quarters, and we will be back on a QOQ growth for the balance part of the year, and therefore we'll end the year on a high single-digit year-on-year growth in revenues.
Okay. So you are expecting maybe some amount of makeup in the second half of the fiscal, despite this volatility that you've seen from one particular client. In fact, can you give us how many customers you added in the quarter in the corporate learning group segment? And what are you guiding for in terms of addition of clients? What is your visibility?
Yeah. So typically we have been adding, so there are 2 or 3 good things happening there. Our client acquisition track record continues to be either the same or accelerating. So this year, this quarter, we have added 3 new clients, 3 new logos, and have also had 100% renewal record continuing with 3 renewals that we signed this quarter. Our revenue visibility is at $305 million, and we have 70 active MTS clients, which is the way we define CLG's customer universe in terms of the big clients that we serviced in managed training services. And in the coming quarters, we do have a very, very healthy pipeline, and in fact are likely to see an improvement in our quarterly metrics of how many we add every quarter. Not only that, we also are very confident of maintaining our renewal record that we have had for all this time.
Okay. So positive commentary on your corporate learning group segment, but generally we also talk about your skills and career group. This is one business which has started turning around, EBITDA break even in the quarter gone by, this time around 3% margins out here. Are you continuing with your growth guidance that this will either break even this year or even actually report an EBITDA growth this time and a 50% growth? And what is driving this for you this time?
Yeah. So, yes, first part of the question, the answer is yes. It had 119% year-on-year growth in this quarter and 3% EBITDA. This business is actually shaping up well. Just to remind ourselves, and therefore will end with 50% plus revenue growth as well as a small EBITDA margin. What we have to remember is that this part of the business is in an investment phase, because we went through a huge transformation exercise and we are right now investing in this business for its growth. This is not its steady state volume. Its steady state volume should be 4 or 5 times this. And that's what I think we are heading for. So in this investment phase, there will be times when there will be small, the investment may be a little excess of the return that the business is generating. But overall, for this year, we are holding on to this margin and this revenue growth projection. And I think the business is shaping extremely well. There are three components which are contributing to this. There is the stack route, which is our deep skills boot camps, which are doing exceedingly well. In fact, have grown very significantly. TPaaS, where talent pipeline as a service, that is very well appreciated and has become a very strong part of our overall business. And the third is RPS Consulting, which was the business that we acquired about a year ago, which has done exceedingly well in the last 1 year.
So go ahead.
No, you go ahead.
I just wanted to ask you about acquisitions, because you did mention RPS Consulting, and then you did make an acquisition of an AI or hybrid workforce-focused company, Knowlescape, some time ago. Tell us, what is the plan when it comes to acquisitions for the remaining part of the fiscal? How much cash do you have on books? How much are you willing to deploy? Is there any visibility that you can provide us?
Many questions in one. So, okay, let's go one by one. Knowlescape is not an acquisition. It is a minority investment that we made.
Yeah.
It is an investment that we made, and we are very, very excited about that, because that is investing in a very strong engine, which will not only have the benefit of the investment and its return, but also the fact that it fills a gap in our offering to our customers, and we see a large benefit coming to us from the revenue and the business opportunities that it will generate. So Knowles, very proud of and very excited about, and there will be more such opportunities that may be coming.
Oh.
Declared that inorganic growth is an important part of our growth. Knowlescape to our business strategy will add a lot, but to our P&L, because it's a minority investment, will sit under the EBITDA line, the benefits of that.
Okay.
However, what we are looking at and constantly evaluating are other inorganic opportunities, and in fact have accelerated that focus, because when times are down, at that time more interesting options and assets become available, and we have to be prepared for that. So there are enough discussions, and as and when they materialize, that's when we would be talking to you about.
Of course, we'll speak to you then as well. Last question before we let you go. How much is digital a part of your overall revenues? Is it a pie that will grow even further from current levels?
Actually, everything that we do is nearly digital now.
Okay.
So digital, TPaaS is fully digital. RPS, large part of their business is fully digital. CLG, a very significant part of the business is digital. We are a digitally transformed organization. Now, the question is, we have to find the right mix between on-prem or physical versus digital balance, which is what we believe that hybrid will be the future of learning.
Okay, all right, Mr. Thadani, thanks a lot for joining us and taking us through what the plan